Canada's second largest bank, Toronto Dominion, is the most American of the Big Five. At the moment, more than 1/3 of its revenue comes from our neighbor to the south. The bank's been riding the wave of optimism after the U.S. election that's pushed its stock to its record high. Year to date, though, TD is trailing its peers in terms of growth within Canada. Here's a look back at 2016 with CEO Bharat Masrani.
I tell you, firstly, we had a fantastic 2016. The bank really performed well, delivered record earnings. Our stock price has done very well. Our shareholders have done, pretty well. So very happy with the foundation that we have and some of the momentum we have going into 2017. Say from a financial perspective, a mixed bag. In a sense, my view is that Canada probably is moderating from a growth perspective, given all the headwinds. We've just been through a commodity cycle. Some of the housing reform rules that are being talked about will probably, have some impact on the economy. So I see Canada moderating. On the other hand, the U.S. is doing quite well. And what you see there in employment numbers, growth numbers, the interest rate curve has certainly shifted. And if you put it all together, given the diversity of our business model, in fact, I made this statement for our shareholders the other day, that we do have, if these conditions sustain in the U.S., some of the momentum we're seeing, then TD, there is a chance that we would be able to get into our medium-term growth target of 7 to 10%. So it's a good story, and I think it emphasizes the importance of our business mix, and frankly that we are a diversified business mix that helps us out when one part might be slowing down a bit and the other part offsets.
In fact, that Canadian retail business has for so long been the core profit engine for the banks here. No longer, you see slower growth there, and the U.S. retail bank being
well, it is still it's a fantastic business. For TD, I mean, we are in an enviable position. It is the largest business we have. In fact, 1 in 3 Canadians or even more bank with TD right across the country. So it is a great business. But given the scale we have, if the overall economy doesn't grow as fast, it's going to have an impact on those numbers. Having said that, I'm very happy with the progress we are making in that business. We are really resonating with our consumers. So I wouldn't want you to be left with an impression that that is not a growth engine for the bank. It certainly is. I'm saying from a relative perspective, given what we have from a macro environment, I see the growth out of our Canadian retail business to moderate a bit from what we've been used to over the past few years.
You have increased your exposure to that U.S. market through acquisitions and had a pretty sizable presence there already on the retail bank side. Will that continue? Is that a market that you want to push deeply into?
It has been a great story for TD. We have a fantastic footprint. We are a scale player. We have a fantastic brand south of the border as well, all the way from Maine to Florida. So yes, we are organically growing our bank. That has always been the core part of TD's strategy wherever we go. And so that is working out quite well. And if acquisitions were to present themselves that accelerate our organic growth aspirations, we'll certainly look at it very seriously.
And the U.S. regulatory environment, is that an impediment to those plans at all? Because it's a very different kind of picture, and you've got now dual regulators to deal with.
Yeah, no, you got to adapt to the environment you find yourselves in. The U.S. environment is a lot different than Canada. Canadian regulatory environment is more principles-based, whereas U.S. is more rules-focused. So we've adapted to it. In fact, TD has been in the U.S. for more than 100 years. Our TD Securities business in New York just celebrated its 100th anniversary there. So we are used to dealing in different types of regimes. So I don't consider that to be an impediment.
Let's talk about wealth management, because it's a growing business for many banks. It's one of the very profitable businesses that sees good growth ahead. How threatened do you think that business is by things like new rules on transparency around fees, at the same time where there are alternatives from the fintech space, things like robo-investors? Is that business threatened?
I wouldn't want to call it threatened. It is going through some change, some transformation, a lot of it very positive. I think some of these new techniques that are being introduced, they certainly help investors. The other side of this is that the population is aging. People's needs are more wealth-oriented as they move to a different stage in their life. So the overall market is expanding a lot more than perhaps other segments that banks might be in. So it's not surprising that, notwithstanding some of these rules that might slow down growth perhaps, is offset by the fact that the market is expanding, because that's the way the population is going. So I consider wealth to be a core part of our bank. In fact, it is as well an area which we would like to grow and have been growing. In fact, last year we had 9% growth in our wealth business. So I'm very happy with the progress we are making, and I expect it to continue to grow.
You did have a good share price performance this year, no question, and yet even with year-to-date 17% increase in your share price, you lag your peers because they were at 20%. Do you feel as though TD is sort of playing behind the 8 ball at all against some of your peers?
I don't, because we execute against a long-term strategy. If we look at how we performed over the past 3 years, 5 years, 10 years, I'm quite happy with how TD rewards its shareholders by having consistent earnings, predictable earnings growth as well. So I don't. I'm very happy that the bank delivered 18% total shareholder return, this fiscal year that just ended. So I think we are absolutely delivering for our shareholders.
One of the big themes of 2016 is the Canadian housing market, concerns about it imploding, concerns about bad mortgages ahead. Where is that on your radar for next year?
Housing forms a big part of the Canadian economy. Housing is very important to TD and frankly all the banks, given its size, scale, profile. So anything that happens to housing will have, some impact on us and the country. So yes, there are pockets there, certain particular markets, mainly Vancouver and Toronto, that feel that perhaps price increases have been overdone. Our view is that this will moderate at some point. We don't see from an economic or a loss perspective a major disaster in the making here. But without a doubt, we are watching certain markets just to make sure that our stress testing, our analytics work out as expected. There is this new aspect of perhaps a change in how the rules might work. We've seen a lot of changes from the Department of Finance, for example, and frankly I welcome them because I think they were prudent. They not only helped to moderate some of the price increases, but they also help to stabilize the market and make it more resilient. So very happy with that. We'll see how the CMHC proposals on risk sharing work out. And there I worry a bit because the implications there could be quite large depending on what we do. So let's see what those rules turn out to be. But the way I would see it, a lot of work and time would be required to make sure we don't have any unintended consequences. Because it has worked pretty well for Canada. It provides access to folks to buy a home and get mortgages. So I'm sure all those will be analyzed in great depth before any major changes are undertaken.
All right, we've got to leave it there. We appreciate your time.
Thanks very much, Amanda. Nice to be with you again.
That was Toronto Dominion Bank CEO Bharat Masrani. Well, we've heard where the Big Five CEOs stand on the federal government's new mortgage rules and risk-sharing proposal. Still ahead, Canada Mortgage and Housing Corporation CEO Evan Siddall and Bank of Canada Governor Stephen Poloz will weigh in. Industry Insiders is back after this.